Now, tax collection, which has been under pressure for the last 3 years or so, is projected to fall by between 15 to 20%, which amounts to around 285 billion rand in lost revenue. Compounding the bad news, the SARS Commissioner Edward Kieswetter painting a picture of how the national lockdown has had a really devastating impact on the country's businesses, companies' ability to operate. And of course, this will all affect the country as a whole. Joining us on the line just to give us a better overall picture of what's been happening at SARS with the revenue collection, and of course this warning of a significant increase in companies undergoing business rescue is MD of Taxa Consulting, Jerry Botha. He joins us on the line now. Jerry, thank you so much for your time. Thank you for joining us.
Thank you so much for having me.
You know, even with the preliminary data that came out early last month, if I'm not mistaken, I mean, things weren't looking good for revenue collection. And yesterday's media briefing and pronouncements really kind of just sealed the deal and made things all the more real.
No, I agree with that. I mean, it is probably one of the longest releases that I see SARS have ever done in 25 years. Mm-hmm. And there is an incredible amount of detail shared. So I think it's very clear that SARS is keeping their eyes very, very closely on this. And they pretty much, I think, have probably as good a plan as you can have to obviously collect as much as possible during this period. Something,
of course, that the SARS Commissioner himself touched on was, the sustainability, the health of a lot of South Africa's businesses, predicting that a number of companies will, likely undergo business rescue in the coming months. What are your thoughts around that, especially now that we've received those news around SA-based airline Comair filing for business rescue yesterday? We know that last week, major retailing company Edcon did something similar. What are your thoughts on this development concerning businesses, the sustainability of businesses under this pandemic right now?
Well, I mean, I'm not an economist, and I think anybody that's been half awake will know it's not going well. I think business rescue in itself is not something that stops you from paying your tax. I think the far more important statistic here is where basically 54% of businesses, according to the SARS report, said that they could survive between 1 to 3 months, and that 46% of businesses have temporarily closed their doors. Mm-hmm. And if you then look the liquidations, that is up with 12.3%. And the insolvencies are down with just under 14%. And then retrenched employees, I think, is actually relatively low at this stage. It's only increased with, I think, about just over 1,600. So business rescue is one thing. The business still carries on. It's still the staff. It still pays its taxes. It still trades. It is the closures, the liquidations, mm-hmm. insolvencies, and the retrenchments where suddenly they stop collecting revenue in totality. Mm-hmm. And I think those are the things that they must be very worried about.
Mm-hmm. I mean, in response to these percentages that you've just shared with us with regards to the liquidations, the insolvencies, the closures, retrenchments, would the prudent thing for the revenue collector to do right now be to kind of start modeling adjustments with respect to, the 2020, 2021 revenue figures, kind of just start looking ahead, casting their eyes forward to see where they can still rummage some kind of revenue collection through taxes?
I think they've done that. I think the document speaks to that, and I think the document has got a kind of a very humble and realistic undertone. Mm-hmm. In terms of the fact that these are unprecedented times, and nobody's been in this situation before, and we don't know what we're going to look like in 2-3 months from now. Mm-hmm. So, I mean, a lot of us just prepared for 3 weeks lockdown and then it's over, so some naive, including perhaps myself, naively thought. I think what they are focusing on is a lot in terms of electronically to make sure that the system still keeps going, and they obviously make very, very sure they specifically focus on pay as you earn, because obviously individual tax is by far the biggest contributor to revenue in South Africa.
Right.
You might think it's corporate tax and VAT, but it's not. It's individual tax it's individuals that pays the most tax in South Africa by far. If you look at the total revenue collection. And a lot of that comes through the pay-as-you-earn system. So they focus really on the fact of the importance that companies must keep paying their pay-as-you-earn. And obviously, these deferral measures where you could pay any percentage of your pay-as-you-earn over under COVID-19, they've also indicated obviously that has impacted the revenue collection already. Which, by the way, I personally think is a very, very dangerous thing if you kind of use SARS, even though it's legal, a little bit as your bank, because you don't have the cash flow. That liability don't go away. It is just postponed. And how are you going to trade yourself out of that situation? So I think this is a very good document, and I think it tells us that they really try and do as well as they can in a very, very difficult situation.
Jerry, we'll have to leave it there, but I really appreciate those final sentiments about how sober the document is, how sober the work of the revenue collector has been. I mean, SARS Commissioner Edward Kieswetter has been quoted saying that regardless of how bad things get under the COVID-19 pandemic, the work of the revenue collector is something that can never stop. It's something that can never kind of just lull. It has to keep going because they are a source of revenue and income for this country.